All right, we're going to get right into it. We're going to have Raoul Paul of Real Vision on the show in just a few minutes. Very, very exciting day, especially for me. Raoul is a major part of my Bitcoin journey. I was just telling him off air. So I'm very excited to talk to him about all things Bitcoin, Ethereum, crypto, NFTs, and macro. Real quick, I want to see how we feel in post DeGods. Big day yesterday in the NFT space. Spencer, you were on the show yesterday morning. That was really the first inning of yesterday in terms of like the response to DeGods. Thought it would be worth covering it quickly before we actually bring Raoul on. But Spencer, how are you feeling 24 hours later and given everything that kind of played out over the course of yesterday?
Yeah, I mean, look, I think we said on the show yesterday, I think the art update was a little bit underwhelming. People are also really skittish, and the combination of those two things is kind of what played out. I think it's not overly bearish, though, as the chart might represent, is like really what happened is one dude sold an unthinkable number, right? One dude sold like 1% of that collection got dumped into bids yesterday. And this is the challenge, right? We've talked about this a lot. When that happens, well, it gets dumped into bids of people who are really excited to hold DeGods. Not. And it gets dumped in the bids of people who are going to then dump it into more bids. So it's just, we're going to have all these bids kind of tossed around, right? Like we've got all this. And so it's just going to be a thing for a while where there's going to be that sell pressure from those. I think it's really tough in this market to ship anything that moves price positively. That being said, even in the last market, I'm not sure that this would have been a positively received announcement. I just think DeGods was the only NFT in its price tier, and that's a tough thing to maintain. Now, there was the opportunity for them to price into the old Azuki price tier, which would have been good for NFTs overall, but they just didn't do it, right? And we just kind of have to come to now. You know what did run yesterday like a motherfucker?
What?
Sproto Gremlins. They finally broke 1 ETH. And I know because I had not anymore. So I had them all listed because I was like, you know what? This isn't going to, I had always been like, this is going to break an ETH. And I had a bunch and I listed them all. And then they ran to an ETH and they all just sold at like 0.8. So I left like 0.2 on the table each.
Good job.
I woke up and I was like, like, no.
Good job. Right. Good job.
Oh, no. I made money. I made a winning trade. What a disaster. This is a train wreck of a situation.
It is.
In all seriousness, Spencer, in this market, being that your job is to make NFT profits, that's literally your profession. I'd imagine any W's should be celebrated. Like you're acting like kind of cool about it, but I kind of feel like inside you're like, no, W's.
To be clear, our W was like 0.1, 0.2 ETH on each. Like it wasn't a huge W, right? Also, the timing of the joke isn't really here, but you're like, your job is to make profit on NFTs. I was gonna feel like I'm probably unemployed soon in this market. Right? I mean, I don't know, but yeah, no, we're making some W's, but the yeah, I think it like I bring that up as a specific example of something I said yesterday, which is that like the mimetic thing feels easier to pull off than the like value roadmap-y thing. Even though DeGods doesn't really have a roadmap, like I don't know, it just seems tough.
I feel like your job also. Oh, go ahead.
Well, I was going to throw to you, Nick. I was going to see what your perspective was, on what Spencer just commented, read DeGods, and just 24 hours later, because again, it was the very first inning of yesterday when we talked about it. By the evening, I feel like it was a totally different situation with hundreds of DeGods being sold into bids. Then we do have to get to the weather report. Then we have Raoul that we're going to have an extended interview with. But anyway, Nick, please go ahead.
The first thing I was going to say is Spencer described his job as making profits from NFTs. I think his job is to just hold ETH basically and do nothing, and then have his team take care of everything else. His expanding team. In terms of DeGods, I mean, yeah, but I think Spencer actually accurately captured it. I was texting you yesterday though, being like, at some point you got like. This is a buy, I guess. I've never held DeGods. That's never been a position that I've had. I did have a Ute And I think, honestly, you seem to have, I don't know. I get more community vibe from Utes than I actually do from DeGods, although I'm not in their Discord. I don't know a lot about their community, so it's very difficult for me to make any sort of assessment. The reality is Frank was out suggesting that it was a fumble. The market didn't react well. The person dumped a bunch of them, but like that's fully out of his control. I think one of the things that's like really challenging in the NFT space, you have limited control over the price action of NFTs, no matter what you do. And due to that, like you can only control the things that you can control. If you really want, I guess you could cough up money and control your own floor, which is manipulation. But I mean, that is an option in the realm of possibilities. But outside of that, there's no way to like directly control that other than delivering things that people are excited about. But I don't know that there's been anything in the history of NFTs that anybody's been excited about other than I feel like Apes for a while was delivering it. Well, yeah, but price go up is again out of the control. I'm talking about actual deliverables from teams. I think only like the mutant serums were huge. The mutants were big. I don't know what the dogs were, something that people were enthusiastic about. I'm trying to think what else there's been in this space that people have been excited about, period, in the delivery of the history of NFTs. Like what? Like I literally can't come up with
Nike acquisition of.
Yeah, that was
okay.
huge.
Yeah,
That's probably the actual biggest one. All the stuff that you just mentioned, Nick, is just more NFTs.
Other side, I know it's more NFTs, but there was a lot of excitement around that.
At the launch, there was, but a lot of people got wrecked, and in fact, I feel like that was the mass consumer became the exit ramp for all the holders at that point in time, and all the, we'll call it sophisticated NFT traders who have been in the market for a period of time were like, oh, I made a profit, I'm getting the hell out of here. Whereas like anyone that was racing into other side got wrecked. Just like, so, and that was actually one of the largest, like the same way that Frank's calling it a fumble, Yuga would have called that a fumble as well, I guess, in terms of their launch. And I feel like that was kind of the last hurrah for the NFT market, was basically the other side launch.
Well, that's when literally everything crashed, including the stock market shortly thereafter. So we'll definitely dive into that. Let's go to Sig for the weather report, and then we're going to bring on very special guest Raoul Paul of Real Vision. Very exciting guest. Signal, please take it away.
Yeah, morning, guys. It's Friday. It's 11th of August. You got total market volume coming in around 12.4 million. You got Blur at 8.8, OpenSea at 2.6. Not much change on the leaders, obviously, except for DeGods. We'll talk about that in a second. You got Apes hovering around 30.9 and Pudgy slight retrace down to 4.0. Over the past 24 hours, well, we're talking about DeGods. Obviously, Frank faced a barrage of criticism across the community and ended up apologizing for fumbling. Longtime DeGods holder dumped over 100 PFPs, making the price retrace as low as 6 ETH before settling at 6.4 this morning. Utes dumped alongside it as well, about 20% before settling at 1.4. Over in Jack Butcher's ecosystem, well, Jack Butcher and Jalil.eth, the Infinity contract was drained after an exploit was found by hackers. Almost 40 ETH was stolen, with the rest of the funds being saved by software engineer Saigar. Anyone who minted from the contract will be refunded. On to what's happening in Skechers and collectibles and shoes. Skechers USA has teamed up with Snoop Dogg to put out a shoe designed by the rapper. The shoes have this sort of like Air Max look and feel. They cost around $100 and are available on the Skechers US site. And then lastly, despite having technical hiccups, one of the biggest wins of today and this week is DK Motion's Open Edition over on Base. It has minted more than 56,000 pieces. The piece has garnered even more attention after being censored by Instagram and Twitter, and received lots of support from the NFT and crypto community. It's ending in a few hours, and the mint so far has raised over $1 million. Over on crypto, BTC at 29.4, ETH at 18.15, Solana at 24.5, and Ape at 1.8, all looking pretty steady. So it's back to you, folks.
Fantastic weather report as usual. Signal some other updates from the Nifty Daily Digest, the daily digest that is published from the nifty.com. We already talked about DeMedici Group. Xverse, one of the leading Bitcoin wallets, announced the completion of a $5 million seed round led by Jump Crypto, aimed at making Bitcoin easier to use and accessible for all. We invested in that round. So there's a little announcement of that, and I'm sure they're going to be tweeting that out soon. So shout out to Xverse, very exciting stuff. I think Signal covered this, but I'll just reiterate it. DeGods shared that starting Sunday, holders will be able to update their DeGod to a Season 3 DeGod in exchange for 333 Dust tokens, with 100% of the proceeds going to the Points Parlor prize pool. As of 7 a.m. Eastern time, Dust is down about 24% over the last 24 hours. So those are your updates from the Nifty Daily Digest. Sign up at the nifty.com. You need an account there to claim the free NFTs that we give away on this show on a regular basis. In just a second, we'll be ready to bring on Raoul Paul of Real Vision. Very exciting guest. He should be with us in just a second. And here he is. Here we go, live from the Cayman Islands. How's it going?
GM, everyone. How are you?
Doing very well. Very excited to have you. You're an NFT connoisseur. I can tell from your profile picture. You iconically changed your profile picture to a wrecked guy, sending it, to the moon at the time. But no, Raoul, in all seriousness, we're super excited to have you. I was telling everyone that you were a major part of my Bitcoin journey. And so I want to talk about all things crypto, from a cycle and price action perspective, as well as macro. I like to start with open-ended questions. I'd love to know, in August 2023, rates are high. Jerome Powell seems to be looking to, save his legacy here and not have as much extreme action, from a macro perspective. NFTs seem to be bottoming here, the trough of the bottom, as Crypto Kaleo, who was a recent guest on the show, put it. Bitcoin, Ethereum are actually up big on the year. What do you make of all these different components, and where do you think we're at here?
So, look, crypto tends to be forward-looking. So it follows the liquidity cycle. And the liquidity cycle is kind of how much the central banks are printing, really. And so we kind of know that as economies slow down or rates get too high and the economy slows down, the probability going forwards of them having to cut rates goes up.
Yeah.
So our liquidity indicators at Global Macro Investor back in June started bottoming. And that's when I bought ETH added to my ETH into that low. And then the rest of our indicators kind of bottomed in October, just as the markets bottom, and it worked really well. And so the crypto markets have been forward-looking. ETH seems to be more forward-looking than Bitcoin right now. And so they have been rallying on liquidity conditions easing somewhat. And these are global conditions, not just the US. So we had the Bank of Japan increasing their balance sheet. We had the Bank of England and a few others here and there, and other liquidity indicators doing that. So that drove that forward. NFTs are like the assets in the ETH economy. And if you think of, usually assets are the last things to bottom. So the stock market usually bottoms first. So like right now in the US, the stock market bottomed in October, but the housing market's still going down, right? And we're seeing it with Rolex watches as well, because people's discretionary spending has gone down and nobody's got any capital gains from trading. Everyone's just taking losses all day. So therefore, there's little demand for NFTs. So we're in that bottoming phase for NFTs. And I've been mentioning this recently as well. And it's the lagged effect as the ETH economy starts to recover. As the ETH economy recovers, we'll see a lot more, activity in crypto. And then we'll see NFTs starting to pick up as people got money to spend on, trophy assets or whatever within the ETH economy. So that's where I think we are now. My work suggests that this is only going to accelerate, even though today, rates are really keep going up at the moment. And while the Fed look like they're pretty much done. I mean, inflation keeps falling and everyone's kind of lost sight of that. But I think the bond market's having to suffer from too much issuance of new bonds because the governments are having to pay the interest on the debt, and the interest rate has gone up so much that they have to sell more and more bonds, and the bond market doesn't like that at all. You'd see the same in crypto, anything else. When there's excess supply, the price collapses. So that's what's going on right now, which I think only exacerbates the chance that things get worse, and therefore perversely things get better for the markets, because they look forwards to, oh, well, if things are really shit now, they're going to have to start cutting rates and they're going to have to start doing quantitative easing next year.
Love the detail. Nick, it looked like did you have something to ask Raoul or some commentary?
I have a question about the market, but before I ask you about the market, is that a barbershop chair behind you?
It is a 1950s barbershop chair that I had refurbished. I've used it for both tequila shots at parties or just listening to podcasts in. So it's been multifunctional.
Wait, how do you do tequila shots off of a barbershop
Well, it's like an
chair?
electric chair. Like you fold it back and then it just goes like that.
Okay, got it. So it's an accessory. You don't actually get your haircut in it.
No, but that would be cool. I should do that.
Okay, so that was completely unrelated, but I was curious about that chair. In terms of the market, you were saying, actually, I'm curious. So I've paid attention to Real Vision before when I was getting into, re-getting into crypto. I was in crypto early on, but at that point in time, I don't think there was the perspective, like there wasn't like institutional investors really participating, and it felt like way more of a idealistic thing and a political ideology associated with it. And a lot of the people that I spoke with were kind of on the fringes of I would even say society when I would speak there. So now it's evolved to a point where like we actually have patterns that have emerged, and some of the stuff that you were talking about with crypto being a leading indicator for the markets. Some of the things that I've been seeing actually have been sort of indicate that like the real estate market, everyone's been saying the real estate market is going to crash. The real estate market is going to crash. Although now everything I read always ends up like adjusting. But at one point they're going to say it's a hard landing. Then they say, well, it's going to be a soft landing, which makes me a little bit skeptical of kind of like some of the future direction that people have. First question, when you say we have indicators that see the market bottoming, does that just mean that you saw it tick up and therefore must be a bottom? Or like, how do you end up like, how do you internally like quantify that? Like, what does that even mean in your mind when you end up looking at that? And how do you end up making investment decisions based on that? It sounds like you bought ETH in this case. Are you now like fully back in the market? Are you?
Well, I never got out. Because I learned over time that the best strategy is have a long-term time horizon. And then when these kind of business cycle troughs, in crypto, they're 80% down move, but they're in that long-term uptrend, right? And the magic is to add to your positions every time it hits the long-term uptrend and everybody hates it, right? That's really where you make all of the money. So what we do is we look at these indicators with a year-on-year rate of change. And what you're looking for is liquidity to stop going down. And then it starts ticking up, and maybe it crosses through zero or not that, but just on its way up. Usually that's the signal that liquidity's bottomed. And you look, it's probabilistic. So it's not always 100% certainty, but it's like, listen, the price has collapsed. All the worst news in the world is out. Everybody hates each other on Twitter. Everybody's short. Everyone thinks everything's going to go bust and it's the end of the world. That's usually a good time. And if the liquidity indicators are saying, hey, listen, the absolute worst is now behind us. Also, it's really interesting because a lot of people get caught with present day conditions, their narrative, and then saying, well, why is the price not lower? Particularly like in the stock market right now. People are like, why isn't it lower? There's going to be a recession or whatever. It was all priced in last year. I mean, we had an 80% bear market in crypto plus. I mean, if that wasn't a recession, then I've no idea what is. The NASDAQ was down 35%. That's a recession. That's a regular kind of recession in the NASDAQ. So It all happened last year because markets are forward-looking. They could see what was going on. They could see that the Fed jacking up rates at the fastest pace in history was going to cause an economic slowdown. Now, so it actually doesn't matter if we get a hard landing, soft landing. That was all last year's game. This year's game is how much liquidity comes into the system, even without liquidity, as long as the Fed are not just, if they just take their foot off the beach ball that's underwater, it's going to burst out because these things are in secular uptrends. Both crypto and technology stocks are in the secular uptrend. So as soon as you kind of stop the rate of change of rate rises, it all goes up.
I love that insight. I mean, last year, when you talk about crypto selling off, Facebook, Meta stock sold off as if it was a crypto asset. It's 5x from the bottom here. And yes, I love hearing the way you think about markets being forward looking. When I think about crypto specifically, if I recall from previous interviews I saw with you, you mentioned that you sold Bitcoin in the 17, 18 cycle when they started forking it. That was what scared you away at that time, if I recall correctly. Then you were in on Bitcoin, but you made the switch to ETH in the previous cycle. Right now, are you still, a giga ETH bull and not so focused on Bitcoin? Are you looking at other assets like Solana or Avalanche or anything else? I'd love to know your crypto specific thesis.
Yeah, so I'm chain agnostic. What we're trying to do here is, look, I'm not Web3 or crypto agnostic. I'm a passionate believer and want to educate people and help people understand that journey and help institutional investors to corporations to anybody use this technology because, we all passionately believe in why. But at my level, I want to make money out of it too, right? It's this magic thing where you can kind of help change the world and also make money at the same time. So all I do is just look at a couple of things. One is I use Metcalfe's law, which is like how you value networks. And it sounds like it's very fancy, but really it's some proxy of number of active addresses and the value that gets transacted on that chain each week or each month. And you find that once you use a measurement like that, pretty much all of the chains are valued accurately versus that activity. So I look for that and you think, okay, well, what's got more adoption capability right now, Bitcoin or ETH? Now, Bitcoin's changed somewhat with ordinals and other stuff, right? But really, ETH is where everybody's building everything. Okay, and it's a large asset. So then I just look at the chart of the Bitcoin ETH cross, and this bear market, ETH did not sell off versus Bitcoin. In the bigger picture, it's really been in this kind of wedge pattern that usually looks like it's another breakout to come. So that kind of makes fundamental sense to me because there's more activity on chain, and so I think price drives it. Now, I then started looking at other assets, and the one that I noticed got a lot of adoption, a lot of developers, a lot of activity was Solana. So I look at the Solana ETH cross, and it's like, hell, that looks like it's going to break out too. So my allocations are really something like 80% ETH, 20% Solana, and there's other bits and pieces there here and there, but really it's like it's a concentrated bet. I could change my mind if things change. I could be 100% Solana. I could be something else. But, this bit, the kind of middle to top tier is an easier trade than trying to find the next big thing. And I'm never going to make the 500x doing this, but I'm unlikely to lose all my money. If I look at the dust in my bags from the last cycle where I tried to buy like a equally weighted basket of smaller stuff. I mean, all of that was a failure apart from very few things. So I'm like, okay, I'm just going to focus on it. The other one that I'm actually focused on, I've mentioned this a few times before. I don't really have much of a position in it, but is Doge. And the reason being, it has a lot of owners, but no network effects apart from memes. If Elon uses it, so right now, most people don't realize this because half of Twitter is American. We don't get payments from Twitter because we can't have Stripe here in the Cayman Islands. And that's true everywhere. So there's a whole bunch of people all around the world who use Twitter who can't get payments. How do you create a global payment system for everybody? Well, just use an existing crypto. And Elon's made this very clear that he wants to use Doge. So if I can just instantly pay you in Doge for something via Twitter, and you can convert it back into your currency of choice, kind of works. So I've got my eye on that, and that because that could be a fun one. But otherwise, I just try and stay away from all of the FOMO. You know, I've got a lot of friends of mine hitting me up about Pepe and stuff like that. I'm like, I'm just not going to do it because as soon as I get into it, it's too late. You know, they got the bags in early.
I think you're describing kind of a similar thesis that a lot of us have shared on the show. Is literally, I mean, I have a Bitcoin. I've wanted to have a Bitcoin, and so I always had that. But basically ETH, Sol, and Doge were so that like we have the
Really?
yeah, it's basically so we have Easy who comes on our show often, and he does street interviews, and he'll go ask people, he's like, name a cryptocurrency, and they all say Dogecoin. So that's like the first thing. Everyone knows that. So when they want to go
brand
buy
recognition, right?
Yeah, they're going to end up buying Dogecoin at some point. Like, and inevitably it's like when their friend gets rich because the price went up, well, then like more people jump in and want to get price action. I was going to ask one thing. It seems like Pia, you wanted to say something.
Well, just real quick. I mean, I'm blown away that literally Raoul is like talked about the three assets that we've talked about on the show recently, which is ETH. I mean, obviously we talk about ETH, but we started building on Solana a few months ago. And in that process and meeting people that are building on Solana, I was like, I kind of think that we need to start buying Solana. So I've been accumulating Solana. And then with Dogecoin, between what Nick just mentioned about the street interviews, to also like, it just seems like the normie crowd, you know, no disrespect, but the people that aren't crypto native are particularly interested in buying Doge. I remember last bull run, I was at a martial arts gym and one of the black belts was asking another guy when he should sell Dogecoin. And I was like, all right, well, this is some kind of indicator here. But anyway, Nick, go ahead. And then I also want to ask Raoul after Nick asked this question about what's going on at Real Vision, because I do think it's a really cool platform. And then I want to see if Spencer or Signal has any questions, but Nick, please go ahead.
So the thing I was going to ask is, you said all the chains are valued accurately because of the activity on chain. One thing we've been discussing, I'm curious, A, how do you measure that? B, how do you value that? But the way that we were discussing it, we've been talking about, we have our own, it's not a coin. It's literally like it's a point system that exists on our website, but it's called Bones. And that's the token that exists inside of it. But it's not a token. It's literally just a database entry in a database ledger. But the metric that I was looking at was turnover, velocity of money, essentially. Like, how fast are we turning over money that's available inside of the ecosystem? And I went and looked up the US rate of velocity of money, and I think it was something like 1.2 or 1.4 per quarter that you have basically all of the money supply turnover. Now, how they measure that, I think the real metric is like GDP relative to money being turned over, but there's different ways of measuring that. But when I went and looked at NFTs, for example, as a percentage of ETH, it was awful. Like the statistic, like the number was like all the NFTs sold accounted for like 5% of the total supply of ETH at this moment in time, or like 10% of all ETH in the system. And I was like, well, that doesn't seem to be like a positive indicator. Like, that just means, it could mean, oh, we're early in the adoption cycle. There's a number of factors, but I'm curious, how do you measure that? And do you ever look at that velocity of money side, or am I crazy to be looking at that?
Yeah, I think you are. And the reason why, look, it's directionally right? The reason why is different chains trade different values. So XRP has quite a lot of throughput, but it's super low value. Much like layer 2s, super low value, high throughput. What you find is Bitcoin has larger transaction sizes. So there's more activity that's worth more money that's happening amongst more people, right? That's how I think about it. So, you know, it's got to be some sort of cleaned version of active wallets, whether you use the Masari one or whatever, you know, whichever one. And I don't think there's a pure mathematical formula, but we just multiplied one number by the other. That chart is exactly the same as the charts of the underlying chains. So that's really interesting to me. The one that started deviating was actually Ethereum, and it was after 15.59 came and the burn started happening, is suddenly it started trading at a premium because it's like a stock that's got a dividend as well. So there was an extra value to it. And we've seen that pretty consistently with others that have similar types of mechanisms. So velocity of money is helpful. It shows that there's vibrancy on chain, but you can game it. It's really hard to game, high values of transactions. And NFTs, what you're talking about tells me we should be near the bottom, because the NFT total velocity of money or value transacted is terrible right now, right? Because if you think of the number of active addresses versus total addresses in crypto, that's like down 65%. So we've got like 118 million Coinbase wallets and 9 million actives. And then in NFT land, it's another leg lower than that, right? So what you've got is something that's like 90% discount to where activity is now. So if you get an increase back in activity, again, we will see money flow through into this area. So for me, it feels like it's really cheap, and you always need some sort of crisis to cause it. And the blur farming crisis, I think, was the classic, plus a couple of fumbles by some of these NFT communities, Azuki and stuff. It's like, okay, this gets interesting because the blur farming had created just this ongoing selling from one market maker to another market maker to another market maker to another market maker, and everybody was going lower. Now, they all thought they were going to get compensated by the price of owning the Blur token. My guess is they've all got a massive loss, and that'll be the end of that game. And that's good, because this is the kind of final flush. And I joke with Ovi and Mando from Rec Guy. I'm like, you triggered this, because the market, they dumped all of those apes. Apes.
Yes.
Into a market using that liquidity, and that triggered a liquidity cascade that has not stopped yet, still ongoing, because there's no actual buyers around right now because nobody's got any money. Everyone's skint.
Yeah, they made a good move for sure. Iconic move, ladies and gentlemen. If you're not aware of it, the $9 million press a button Bored Ape sale through Blur. Nick?
Real quick, I just wanted to say, and the only buyer in the market, we got him right here. Spencer Ventures, right there, everybody. He's out. He's out buying NFTs, protecting your bags, doing the service.
Well, good, Spencer, it seems like you have a question for Raoul. Then I do want to dig into Real Vision, but Spencer, go ahead, please.
Yeah, no, and it's tough to be the only buyer, but somebody's got to do it, right? So
it's the right strategy. To have faith.
Of course, I have lots. One might even argue irrational faith, but that's a question for another time. Raoul, I really love your perspective on macro here, and I sort of have like two questions, right? So I think one thing that some people are pricing in is, look, it seems like we likely won't get significantly more rate hikes. That's kind of what a lot of people, it sounds like you were kind of agreeing with this take. But the thing that seems to me a lot more uncertain is the delta between, hey, we're pausing rate hikes, and maybe we see a line of sight in forward guidance to rates are actually coming down. And that's where I see the most disagreement among people who are smart about macro. And so I'm curious what your perspective is, right? Like, there's a real scenario here where, hey, we just kind of keep rates for a year, 2 years, maybe, like, what do you think looking forward? Because, for me, and this is where I maybe have a slight disagreement with something you said, which is you were like, okay, as soon as we see rates pause, this is the real easing up. But I think to me, it's like, okay, as soon as we see rates pause, that's when the real question happens, which is when do we see rates potentially come down? How do you think that plays out in the next year to 2 years?
Yeah, so I've got quite a strong view on this, that I think the Fed aren't stupid. They know all the forward-looking indicators. They know that growth is weak. They know that inflation, all the forward-looking indicators of inflation are falling. They know that rents are coming down. They know that unemployment is likely to rise. They know all of this. So then you've got to ask yourself, why are they so late? And my thesis is because they need inflation to undershoot. And the reason is because they need to get rates below trend rate of GDP, which is 1.75%, because they've got $6 trillion of interest payments to make, of bonds to roll plus new bonds to issue. all of that has historically ended up on the Fed balance sheet. So like the pandemic debt issuance was 3.5 years ago. That is coming up for rolling. And I've proven out in this work called the Everything Code that seems to always end up on the balance sheet of the central bank. And that's consistent with the US, the UK, the EU, Japan. I mean, pretty much everywhere is doing the same thing. There's there was a global accord on interest rates, which is why we're so cyclical. It kind of matches the Bitcoin halving because everything got reset to zero in 2008, right? All rates were cut to zero. It was like a debt jubilee. So my view is, and the work that we do at Global Macro Investors suggests that the economy keeps slowing, inflation really starts undershooting in the last quarter of this year. So I think there is a probability that they cut this year, which the market doesn't want to believe yet.
That's
and
an
I
aggressive
think
take.
strongly we're going into an election year. We're going to see, if you remember, unemployment and inflation are really lagging indicators.
Mm-hmm.
So they lag by about 9 months most of the business cycle, and some of these things lag 18 months. So we're going to see wage inflation falling out until the end of 2024. And so that's going to make it look like core inflation is super low, and the Fed have all the cover in the world to print as much money as they need going into an election. And look, I think so. Yeah, the probability is that, but the question is does it matter? Mm-hmm. So think of the beach ball. You take your foot off the beach ball. That's rate rises stopping. It comes straight out of the water because it's a secular trend. The speed and magnitude of that trend, do we get a gust of air underneath the beach ball to lift it up into the sky? That's the rate cuts and mainly QE. Mm-hmm. So either way, it does fine. Now, if you go back to this hypothesis and look at 2019, similar thing, the Fed paused December 2018. Mm-hmm. Bitcoin was up 300% 6 months. The NASDAQ screamed higher. We had the same in 2011 when the Fed paused. Everything screamed higher. So I think, though, you can't stop the trend, but you can accelerate it.
No,
go ahead, Spencer.
Sorry, I just had to follow up there. So, I'm kind of gaming through this scenario, and I love your sort of bullish end of your perspective, because I think that's kind of a well-reasoned argument. One thing that I've been considerate of, you talked about where do NFTs fall in all of this, and what's leading and what's lagging to sort of macro. At least my view here is so ETH feels like pretty obviously correlated to S&P. Like if we have a big, although S&P recovered a little bit more, like percentage-wise up from the bottom, it's kind of mixed, right? Like it's pretty correlated. It seems pretty obvious to me that if we have a rate pause and or a rate decrease, like we'll have ETH run, right? That's, I think, not a different. Now, my question is, and this is what I have a harder time thinking about, is what the impact on NFTs might be. Because historically, when we've seen significant ETH runs, we see NFTs sell off in ETH because everyone's like, oh man, ETH is running, gotta go catch my ETH run, so sell my NFTs, right? Do you think, where do you think this, how do you think that NFTs, is a pause or decrease in interest rates, long run bullish for NFTs? Is it short run? How to think about that relationship?
Yeah, so I think that assets tend to lag by 12 to 18 months in any economy, just because it's wealth effect that gets recycled, right? So nobody's making any money yet. So what we've got is we are 15 months behind ETH making a low last year. So, okay, we're in the zone. Mm-hmm. So, you buying NFTs right now is exactly in the right zone. We can never time it perfectly. And, there's different assets. It's very complicated with NFTs. But generally speaking, have punks hit their low most likely? Was that the flush out? And is that the benchmark? Is that like Bitcoin or ETH hitting its low? Probably. So that's how I think about it. They're lagged. So then we need to go into the future 18 months and say, okay, the action's not really going to happen for a while. So it should base, come up a bit. And we've seen that with punks and some of these. They came up from the low. They'll probably stabilize for a while. If ETH rips higher, which I think there's a very high chance it does, even into the year end, they won't participate. Obviously, ETH goes up, so you participate anyway. But the ETH call option that NFTs have embedded in them. But the real action in NFTs is later in 2024 and 2025, particularly when everyone's made a bunch of money in their bags and Solana's gone up, 20x, and they're all feeling clever and they all want to buy Videnzas. We've seen that was also the other interesting point is we saw the generative high-end art market bottom and actually go up. And that's a signal as well. So that was flight to quality. So the flight to quality started to happen and we kind of rotate through the curve while kind of all of the less quality stuff has gone essentially to zero, which is, that's right.
Yeah, I love the insight and pointing out that, that doesn't mean every NFT is going to go up, right? You called out punks, you called out the high-end generative art market. Those are sort of the proven areas of NFTs, if there are any. I want to talk about Real Vision for a moment, which is your content platform. We've had one of our NFT brothers I've seen make appearances there and do a great job, Sergio Silva, known as Sergito in the NFT space. So he's made some great contributions there. I also remember in 2020, you had a trader on Real Vision. I don't remember the gentleman's name, but he called the commodities pump like on lumber and stuff. And I just remember being blown away by that. I was like, wow, I would have never thought to, turn to that market. But what's going on with Real Vision right now? And maybe give some context, because I do think a lot of our audience would appreciate it as a platform.
Thank you. Yeah, look, Real Vision is the place, like everybody here has watched Real Vision. It's a place where you come for high quality knowledge. You get to learn. And we started it 9 years ago, after the global financial crisis and the European crisis, when our whole banking system, I was living in Spain at the time, we almost lost the entire banking system. That's when I started getting into crypto as well, 2012, 2013. But the idea was people are now on their own. You can't trust the advisor. You can't trust the banks. Who do you trust? You have to learn it yourself. And so there's been a big movement from Occupy Wall Street onwards to take back control of your own finances, because everybody realizes they've been kind of screwed in this whole process. So Real Vision was the answer to that. We just wanted to democratize all of the knowledge. So we started all this long form finance content, didn't exist before Real Vision. And we just interviewed the most famous hedge fund managers, analysts, strategists, and gave it to people, subscription-based business. And it kind of changed a lot of people's lives. And then, we were back in 2014 when we first launched, our first ever video was about crypto. So it's been part of this thesis, all of these worlds combined. And then as it's grown, we realized that what we'd also built was a community, because people who like Real Vision content, like you guys, tend to be like-minded, curious, open-minded, interested in how the world works and trying to figure it all out. So we found we built a larger and larger community, and then we've been leaning into that at time. So now we're just building an entirely new platform, which is everything from, pricing and charting and that stuff, but we've also got AI that helps people explain. So you guys aren't finance naturals, but you'll be able to just find out, what does reverse repo mean? Highlight it. The AI will explain it to you. If you just want a content summary, it'll do that. We've got that. And we've also created this incredible network map of all Real Vision members around the world. So you can connect with anybody in this cool visual, not like a Discord, which goes like this, but you can go and find where everybody is. So let's say you're on a trip to Paris. You're like, well, who's in the Real Vision community in Paris I can have a drink with? And you can kind of see them and then chat to them and stuff like that. And around all of that, I've had this core thesis that Web3 is the future of a lot of this. So we've had NFT communities for a while. So we had the Genesis NFT that was free with the pro crypto subscriptions. And that's held good value over time, because it's really our Genesis, and they've had a lot of perks for doing that. Then we thought, if you look at my Twitter PFP, it's a mashup between my Bored Ape and my X copy and my Damien Hirst. No, just with the X copy on that one. And because I wanted to show, after crypto, where it's so tribal, Web3 is less tribal, right? The NFT world's less tribal. It's a kind of nicer, better spirited place. I want to show that all these communities are together, because we're doing something bigger here. This movement to Web3 is something bigger. And we lent into that with a NFT project called the Real Vision Collective, where we bought all art from different projects, even got rights from Damien Hirst to use his, to mash these things together, make unique art, to say, listen, here's a place where anybody in the Web3 community, whatever projects they're involved in, whatever they like, can come together, learn together, exchange ideas, and get a bunch of perks. So it's like a membership NFT with cool art and a whole bunch of perks. Those season 1 came with Real Vision subscriptions for 5 years and all sorts of stuff. Because again, we want to educate, help, and bring people together. So our view at Real Vision is knowledge times tools times network is your best chance of success. Well, it is success. So we leverage into that. And we're just actually right now, finishes today, we're just minting season 2. But you'll like this because season 2, again, is another mashup. It's a cool mashup. I mean, who have we got in this one? We got Crypto Dick Butts, obviously, and a whole bunch of CCO stuff. But the magic of this one is not only joining the community and the Discords, and soon as we launch our new platform, be token gated content and token gated areas and stuff, is I want to have a bit of a joke because everybody knows that I bought ETH call options at the peak in 2021, and that bet went wrong, and I spent 5% of my bag on ETH call options, and they went to 0. And I always say that NFTs are also a call option on ETH. You know, if you get punks right now and they triple and ETH triples, you've made a ridiculous leverage about money. So we thought, well, why don't we lean into this? So 5% of all of the proceeds of the NFT buys ETH 3,000 calls for year end.
Wow.
And then it gets given away in some sort of grand prize. So there'll be somebody who gets like 50% of it. Now, you know, if we sold all 9,000 NFTs, you know, that thing could be, if ETH's at 4,000 by year end, which is possible, that thing's worth over $1 million. And so that becomes just a fun game that everybody plays is, what's the price of ETH? And am I going to get selected in the prize giveaway? And it's also just to educate people about how these things work. So yeah, there it is. And what we're going to do is I think we're going to stop at 5,000 and then burn the rest to maintain the value. So there's not that many coming, and that finishes today. But it's fun and it's an amazing community, and then you get part of the whole Real Vision engine of stuff that goes along with it. So realvision.com/collective for anybody who's interested.
realvision.com/collective, ladies and gentlemen. And yeah, it's interesting to integrate Web3 with the subscription-based content service. A lot of people have kind of talked about doing it, but we haven't really seen that many examples of it. So it's cool to see. I'm assuming it's gone well.
Yeah, it's gone great. Everyone's still trying to figure out the business model of a lot of this stuff.
Yeah.
Because it's complicated with subscriptions versus one-off payments. But we've also got a lot of other experiments to come, what we can do, how we can integrate digital ID, how we can do all sorts of things. So we've got a kind of ambitious roadmap to how we can integrate Web3 and not make it that it's all about Web3. What we've got to, as crypto natives, if we want adoption, we need to abstract this stuff away. You know, you can't use a MetaMask wallet and get some person who's been in macro for 20 years or traditional markets and expect them to go through that pain and then screw it up and lose everything. It's just like, no, we've got to abstract away. So I'm really thinking about that. How can we lead the way here and show different ways of doing it? I think Reddit have done about the best job of anybody, which never gets talked about in NFT community. They've launched not only a token, which nobody's managed to do that hasn't gone to 0 because all the money leaves the ecosystem, and they've managed to launch a massive scale of NFTs without making it all about the price.
Yeah,
Well,
I mean, well, you just said it right there. I was just going to say, and I know I want to throw to Nick, and I think Signal might have a question too, but the reason I agree with you about everything that you said about Reddit, and it doesn't get attention in the NFT space, like you said, because there isn't this humongous price attached. Like basically, if you want to know what's getting the most attention in the NFT space, just look at the highest price items. That's, you know, whatever has the most liquidity, whatever has the highest price, that's what gets talked about, no matter what the circumstance. Nick, you were going to ask Raoul something?
No, I was just going to comment on the thing that he was saying with Reddit, that we use that as inspiration. We have our own NFT platform, which is free. You don't even need a wallet to connect, actually, which is how Reddit initially, you can move things into your wallet. In our system, the majority of them are not, but it's essentially custodial NFTs. So you can go claim them for free. There's no trading of it right now. Inevitably, some of that will eventually show up, but we have in-house artists that end up making the art, and we have almost 1 million NFTs collected in the past few months on the platform. And I think no one pays attention to it, but that's all good because we have a bunch of people who interact on the platform. But the future of all this, I look at something like DeGods and some of the things that are going on right now in the space, and it's just like the future of this is not about $50,000 priced assets, although that does exist. But like before the COVID, after the trough, and then the boom followed, basically, none of us were talking about, like, I wasn't collecting art. Like, that just wasn't, like, that wasn't part of my life. Like, that wasn't even like a thing. Yet now suddenly everyone's just like renowned art collectors all of a sudden. But like in general, that's not like a conversation of the masses that people are talking about what antique item you just purchased or something. And so that's like a very limited subset of society, which is even focused on that. Yet the conversation spread into the masses, which is awesome. And I think that's just because of the digital overlap that exists there, where you have mobile app adoption or mobile adoption and accessibility of these things, and you can interact with it. Whereas with like, I can't interact with my rich uncle's painting. Like, that's just not something that I'm engaged with. So cool, that part's awesome. But we haven't seen, I think Top Shot was really the only like.
I think Top Shot, and the one that nobody knows about is Ticketmaster. They've issued more NFTs than anybody in the world.
Ticketmaster has issued more.
Yeah.
Okay.
Last time I checked, it was 14 million NFTs.
Wow. Okay.
And what they've done is basically you go to a sporting event, you go to an Elton John concert, whatever, their wallet, because all of Ticketmaster's stuff now is all, you have a Ticketmaster wallet. Without telling you, it's a Web3 wallet. So what they do is they drop in to your wallet a memento of the Elton John concert or the Dallas Cowboys game you went to, without the expectation of people trading them. Some they'll get scarcity and stuff once people figure this out. But they've been doing this at scale for a while. I think it's really interesting, which is kind of like Top Shops, but a different way. Top Shops was like, you buy your moment. This is, you went to an event and here's a memento. And I think of it that way because I'm a massive music fan, and I'm old enough to have gone to Live Aid back in 1985, and I've still got my program and it's framed on my wall because it's I was there, right? It was like a humanity scale, one point in time. And so I kept it. NFTs are going to be involved in so many things that people don't understand yet, because we're all focused on, what's the next Fidenza, or what's the next ape, or what's the next whatever. That's mainly a distraction to really the NFT technology. It's just the fun we're having as we're trying to figure this stuff out.
Where do you get the stats on how many NFTs are issued by Ticketmaster?
Spoke to them.
Oh, okay.
There you go. Right from the horse's mouth. Signal, looked like you had a question for Raoul.
Yeah, Raoul, I was going to say, I really wish Real Vision existed when I was at university or just out, because it would have saved me from reading hulls, options, futures, and derivatives over and over again. And I could have just asked the community. So
I know, it's
I think
so
it's
much
a great
easier
product that you're building. Yeah, it's so much easier. I was going to ask, like, earlier on, you mentioned that liquidity indicators are potentially a signal of what can happen in the future. There's been so much attention on BTC ETFs, ETH ETFs coming from institutions like BlackRock. We've seen obviously that investment banks over the last 5 to 8 years have stepped into crypto, stepped out of crypto. How much of a catalyst event do you think these BTC ETH ETFs really are?
So the biggest catalyst event of all is just price rising. Everybody's FOMO, right? So my work, because I've got an asset management firm called Exponential Age Asset Management, we invest in crypto hedge funds, which is another way. It's a fund of funds. So it's another way institutions can get in. So my speaking to institutions is like they've all done the work. I've known about BlackRock, Apollo, all of these guys for 3 years now. I mean, they've all been ready, but they've been waiting for this turn. So I think, let's say we might get the ARK one through today, or it might happen on Monday. There's a possibility that it goes through. Everyone's saying, no, it's not going to be the ARK one. We'll have to wait for the BlackRock one. But look, there's a possibility that happens today, which will take everybody by surprise. What does that enable? That enables, well, the kind of average millennial buyer of crypto is already a Coinbase user, stuff like that. So it's not going to bring them in. It's going to bring in the boomers and the RIAs who use boomer assets. So right now, crypto's up between 50 and 80% this year. So it's attractive. It's done better than every other asset. But really, if it triggers a price rise, it will trigger a stampede. And we've seen these points in time where it just sucks in a bunch of people. But the narrative's been pretty bad around it still. So if you think of the normie baby boomer whose RIA is advising him, he's still in the FTX is a scam, everything's terrible phase. So we've got to get through the other side of that. And I think it's price that does it. So I don't think it's the biggest price event yet, but it will definitely see capital flowing into the space over time. So it drives the next wave of adoption. Now, what's weird is we won't be able to use number of active addresses for wallets because there's these massive aggregator wallets, which will be these ETFs. So it's going to get a little more complicated to understand the space. So I think that all of the investment banks are working on this. They want to offer it to their clients. The regulators have made it too complicated for them to do so, but they are ready. They're all working on blockchain technology to issue securities and do a whole bunch of stuff, derivatives, everything. We've got the asset management firms who've all done the work on it. Most of them did some VC investing in the space. And they've kind of got clarity to do this, but they're just waiting to not get fired. So they need the price to start going up. Then we've got the RIAs who've dabbled in the space, but now they'll have a vehicle because the Grayscale trust really hurt a lot of investors for the RIAs. So we've kind of got all the component parts in place, plus the liquidity component, because people to invest need to have some bloody money, and nobody's got any money still. Right? Everybody's kind of liquidity up to here, because if you were a VC style longer time horizon investor, your money's tied up, you haven't got any capital gains, you've had no exits from anything, and the average investor and the average fund manager hasn't participated in this massive NASDAQ rally. So they're all watching it. Nobody's made money yet. So that cycle is yet to come. So that's why back end of the year, I'm pretty interested, which is why I like this 3,000 strike ETH call option, because I think there's a probability it gets there. But, it's all to play for 2024.
Wait for 2024 when velocity of crypto turnover is going to be the metric that you're looking at. Okay.
Nick, stop shilling your metrics on Raoul. I love that sweepstakes model, Raoul, because I feel like it's something that if it seems like you understand the space, because that is something that people in the space, I'd imagine, would really appreciate. Also love what you mentioned about VCs. VCs deployed all their capital in late 2021. It seems people told us that we had a bad deck and we still raised 7 figures at that time. And I just think about right now, I'm like, we couldn't do that right now with a deck that everyone said was universally not that great. One thing, and I know we're limited on time.
Speak for yourself, Pia. Okay, I'm still closing the deal. All right.
Nick is the fundraiser extraordinaire. Anyway, I know you have to jump in a moment. Just one thing I wanted to cover is you talked about the comparison between Ethereum and NFTs versus stocks and real estate. And I think real estate is a subject a lot of consumers are interested in. A lot of our audience is interested in. Everyone says the real estate market's going to crash. It's going to crash. It's certainly slowed. But what are you seeing with real estate? Where do you think it goes, and how closely are you paying attention to it?
So we think that year-on-year rate of change of real estate kind of bottomed. Prices, at the beginning of this, we thought prices will ease off somewhat, but they won't go down a lot. So our guess was 10% from peak to trough, and it's looking like it's going to be somewhere like this, because I don't think this is a catastrophic recession. It's more like the recession that none of you guys will remember, which was 1990, which was like, it was just a recession. Prices went down, things sucked. No houses traded for a while, which is what's happening now, right? Just house prices aren't trading because nobody can take out a mortgage with interest rates this high. All of that stuff. So everything's gone illiquid. It's kind of like the NFT market. It's gone illiquid. Prices get marked down. Not a lot going on. But we've still got this ongoing demand of anybody who's a millennial who's getting, because everybody's in there kind of hitting 35, they're at a point where they're settling down and thinking, I need to buy a house. So it's keeping a floor under house prices anywhere. Yeah, some others, well, before, like the kind of boomer houses that were out in the countryside were trading for nothing because nobody wanted them because everyone was working in a city. That whole thing's changed now. Suddenly Hudson River Valley is like the place everybody wants to go, and people are moving out to rural New Jersey to buy 5-bedroom houses for the price of, a shoebox in New York City. So the structure of the market's changing. So I'm not wildly negative. Commercial real estate is totally fucked.
Right. Yeah. I mean, on a different podcast that we have, we talked to someone about he called it a bubble. He said commercial real estate is basically a bubble at this point. And he was talking about all different factors and the issues that exist there. Spencer, did you have a question here? Or?
Oh, no, I just want to hop in on this. That one thing that I thought was really interesting about commercial real estate. So I talked to a friend of mine who's a big real estate investor, and I was like, it strikes me that you could just flip it all to residential, right? And they're like, no. Like it's actually the cost to convert commercial real estate to residential is like 10x higher than you think it would be, and often is like cost prohibitive. And that's always been something that I guess I was wrong in making assumptions about, was that like the ease of flipping it. And so commercial real estate, I agree with you, is like has these giant headwinds.
And that again, play it out in macro land. What we do in macro land is, what are the knock-on effects? So commercial real estate bad. All of that's on the books of the regional banks. The regional banks are troublesome anyway with the yield curve and rates. So what does that lead to? More cowbell. All of those assets are going to have to end up on the central bank balance sheet. So there's no way around that except more cowbell. So again, that's how you think in macro. You have to go step, step, step. Never look at today.
Love the quote, Nick.
More cowbell being print more money.
Indeed.
Love it. Well, look, Raoul, we really appreciate you joining us. What was the link for Real Vision, and any closing thoughts on, Real Vision or anything that you have going on that you'd like to let the audience know?
If you're curious in the space, a lot of people have come into Web3 and didn't know about finance, have had to learn the hard way that macro matters. Real Vision, we've actually currently got, just as we're rolling out the new platform, we're about to close the doors on new subscriptions for a while we just integrate the new platform. But if you go to, I think it's realvision.com/last chance, we've got this crazy deal. It's like $20 for 3 months just to get in the door, get learning. It will help you. As you've heard our conversations here, these worlds are the same world. We have to stop pretending they're different worlds. They're the same world. And then if you're interested in being part of the community, the other way is realvision.com/collective, and get involved with the NFTs and get involved in the game of the call option on ETH, because it's going to be a lot of fun. If ETH is like at 3,000 by like beginning of December, it's game on, right? So it's just fun, and it's a great community. Really is vibrant.
That's a juicy contest. So, ladies and gentlemen,
and it's cheap as well. It's only like it's 0.069 ETH. So
nothing NFT people aren't used to paying. Let's be real. That's definitely right in the pocket there. Well, look, Raoul, we really appreciate you we really appreciate you coming on. Ladies and gentlemen, Raoul Paul of Real Vision. This was not a sponsored spot. This was just, someone that we're really excited about bringing on the show as an honored guest, someone that had a big impact on my personal Bitcoin and crypto journey. So thanks so much for joining, Raoul. Really appreciate
I love this. I think we should all do more of this. Is just merge all our communities, get everybody involved, because together we're better. And that's what I love about Web3. We're not tribal. And so, the more we do together, the better it is for everyone.
100%. Couldn't agree more. Check out the 2 links. I'm sure Clemente has them on the screen here with the banner. It's realvision.com/last chance for the deal for the 3 months for $20. Then there's realvision.com/collective for the mint that's closing today. Look, ladies and gentlemen, if it's your first time listening, we do the show Monday through Friday, 9 a.m. Eastern time. You can find Raoul on several other much bigger podcasts, but everybody knows this is the best one. One more thank you to Raoul. Thanks so much for joining. We're ready to wrap. And ladies and gentlemen, check out the show on YouTube, Twitter Spaces, audio podcast on Apple, Spotify, wherever you get your podcast. We'll be back on Monday. Thanks so much for listening.